Hi and welcome to Reliance Experts series. We have with us today Mr. Manish Gunwani, CIO Equity Investments. It's always been a great opportunity to understand the equity market scenario from an investor's perspective. Welcome Manish. So Manish, despite volatility, the markets have been on an all-time high. So what is your outlook going forward?
So first of all, while the headline indices are at all-time high, clearly we've seen fair amount of correction in the broader market because a lot of mid and small cap stocks have fallen by a considerable amount. Now, I think this has happened because last few months have been challenging from the macro side, both globally and on the domestic side. So globally we've seen trade war threats, crude going up, etc. On the domestic side, we've seen election results in the bipolls, banking scam. So overall, it's actually been a challenging time last few months. But I think that the macro is bound to get better, primarily because oil prices seem to be hitting a cap around $80. And once oil prices stabilize, I think India's macro will increasingly start looking better. The second good part is food inflation seems broadly in control. Crop production is quite healthy. So if I look 1 year later, we probably will have a reasonably controlled inflation, which means interest rates can't go up too much. And if interest rates don't go up too much, I think generally capital markets should be quite healthy. So going forward, I think on a 3-year basis, this is a reasonably attractive market. It is neither a super cheap market, neither a very expensive market. I think good funds should deliver reasonable return and create a lot of wealth for investors on a 3-year basis.
So the Reliance Balance Advantage Fund attempts to have benefited from this volatility. Could you just tell us some more about Reliance Balanced Advantage Fund and its strategy?
See, effectively what we are doing with Reliance Balanced Advantage Fund is follow the simple mantra that as the markets go high, you reduce equity exposure, and as markets fall, you increase equity exposure. Right. So for that, we follow a quantitative model which tells us how much to be in equities based on a valuation parameter. Along with the valuation parameter, we've also added momentum parameters because we feel that when we combine these two, we get the best result in terms of how much equity exposure to have. So the Balanced Advantage Fund is a mix of asset allocation through this model, plus stock and sector selection by active fund management, which given our robust research process, we feel that when we combine these elements, we will deliver stable return with very low volatility.
So sir, you mentioned that the fund adapts a model-based asset allocation strategy. So could you throw some light on the model?
The model for equity allocation broadly has two broad parameters. One is the price to earning multiple and momentum variables. The price to earning multiple and the momentum rating, they are in a matrix where if the price to earning multiple is very low and momentum variables are very high, that is the best time to buy equities. So we will be 80% in equities. And when the price to earning multiple is very high and momentum is very low, then we will be only 30% in equities. So that broadly is the model.
So how is the underlying equity portfolio of this fund managed?
So the equity portfolio has blue chips. It has a bias towards large caps. And predominantly we are in the top 200 stocks by market capitalization. Even among them, we typically tend to favor structural companies with consumer-facing businesses over more volatile businesses.
So you follow the price for earnings module. So what are the advantages of this model?
So we use 1 year forward price to earning multiple. We think it has multiple advantages. One is that it closely mirrors the movement of the market because the market also moves primarily on earnings. Second is for very high return on equity companies which generate a lot of cash. The other valuation multiples, typically price to book, does not hold too much relevance because when a company is generating a lot of cash, the stock price reflects earnings more than the asset value. So these are the advantages of using the price to earning multiple.
So, sir, what investment mode would you recommend to our investors who want to invest in the Reliance Balanced Advantage Fund?
See, this is a fund which has very low volatility, so we feel it should be a big part of anyone's core portfolio. In terms of mode of investment, since asset allocation is done by the fund itself, lump sum is the best way we recommend that investors invest in Reliance Balanced Advantage Fund.
So, sir, for equity investors, apart from Reliance Balanced Advantage Fund, which are the other funds that you would recommend? So, would you also recommend investing into secular themes like healthcare?
From a few months back, we've been advising investors to remain in large cap focused funds. So the large cap fund and a flexi cap fund, where large cap forms about 50 to 60%, are the ideal funds at this point of time in our view. Healthcare being an underpenetrated sector in India, obviously it's the kind of sector which will grow for 10-20 years because of underpenetration, the fact that new technology evolves in that sector. So definitely we think our pharma fund offers a good option for long-term investors.
Thank you so much, Manish. It was a pleasure having you with us today. It was indeed a very insightful discussion to have with you, which will definitely help our investors invest better. Thank you. For any queries, you could log on to reliancemutual.com, or you could also follow us on Twitter. The details of the same are mentioned below. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.